these stocks are going ham.
Yeah, they was talking about Tilray today.
So actually, I can show this for y'all. So for y'all that use indicators, I'm just go over this a little bit, real quick. So does anybody use by any chance like the stochastic and the RSI and the MACD?
I use the RSI. I'm using MACD or the stochastics, but I do use the RSI.
Okay, okay. So one thing about the RSI, just a note, you could do support and resistance on the RSI as well, just to kind of give you a double confirmation, as far as like overbought and oversold area. So this is kind of like a good indicator. Like you could kind of try to like retrace like where every time it bounces off like a support line, then you could kind of assume that this would be like a line where price can start rallying back up instead of being completely starts going from an oversold to now starting to buy. So just FYI. So these are just things you can do with the RSI. And as I was explaining to somebody before, what you want to do when you're using indicators, you kind of want every indicator, or you could just have it as a rule, like these two indicators, or maybe the all three indicators, depending on how you want to do it. Either way, the indicators have to align with the confirmation that it's a go, right? So let's say, for instance, you just need you don't maybe you make a rule for your RSI that you don't buy or you don't get the confirmation to go until it's into this area. But maybe you might make a different rule, like you might say, okay, when it hits the support line, that's when I'm gonna go if it's near the support line. Then you'll match it up with like the stochastic where this works a little bit like the RSI too, but it's they have two signal lines, and one line when it crosses indicates a sell. So if you see here the orange when it's in front of the blue indicates a sell. When the blue is in front of the orange though, then it's getting ready to start rallying back up. So people would typically like to do they need the RSI to say confirmation to go, then they need a stochastic RSI to say confirmation to go. And then if you have like a different type of indicator, once all three confluences say go, that's when you enter a trade.
But can
Um,
you explain what's a good RSI? Is it when it's or like when it's near the red line or
so that all really depends on how you like to use RSI, because typically most people tend to like wait for it to get below this line here, as you see here. So once the RSI is dipping below, um, this some people this means okay, that's a good time to buy. However, not all stocks are the same, so not every stock is going to come below like that. As we see here, it was coming below before, but recent times it's not coming as down. So it's been typically buying for the most part for like at least like the last looks like the last month. So you kind of sometimes you might need to adjust it. So sometimes you might have a rule. I mean, and it does depend on like the stock you're trading as well and what time frame you're on. So I'm also on the 20-minute time frame, FYI. So like if I was to change this to daily, then it might not have the same type of rules. And then daily might say you might be a little bit more um, stringent with your rules. So for your RSI, you might say you might only still get in when it's below this line, and then that's a good indicator to get in, right? So instead of you waiting for it to bounce here, you might say when it crosses here, I'm gonna get in. So this would be like technically your when it crosses this line, that could be your confirmation to go. Um, and this is just to let you know, like there's a lot of different ways to play with indicators. It's all about finding what works for you and how it fits into your personality. And once you figure that out for yourself, because everybody, I mean, there's so many indicators, right? But everybody does not use them the same way. Even though we all learn what they're supposed to be technically used for, somebody's gonna make some modification to like, okay, I'm gonna use it this way versus I'm gonna use it that way. Like some people might say, I'm gonna use it to I'm gonna use the RSI to tell me to go once it's in this white area below the 30, right? Because the range it goes is like once it's below 30, that means it's oversold. Once it's over 70, that means it's overbought. So and in the middle is kind of like your regular range. It's kind of like healthy price action, I guess, if you was to think about it in that way. So some people might look at it that way, but some people change the rules for themselves where they say, you know what, every stock is not the same. I'm gonna trade these certain stocks. So I'm gonna make it to where like I'm gonna just trade when I'm gonna buy whenever price gets below like this line or something because it looks like this tends to be the true area when price tends to start reversing. So that could be how you use the RSI for you. Um, see. Okay, there we go. Same thing. So like the MACD, typically it's the same kind of principle. You want these lines to cross, but also another chance. Some people like to see that there's a lot of volume. They want the darker candles to also be representative because that kind of tells them it's a confirmation of a trend. Because like if you look here, as you see here, you see there's like darker shade volume bars, also known as like a histogram. So you have like darker color bars and like lighter shade. This just basically mean confirmation of like how strong of a trend it is. So like the darker it is, the more stronger the trend is, the more meaning that the volume is in harmony with price action and it's and the trend is like um, being confirmed that it's actually a legit trend instead of a fake out or something. So typically, some people use these. Some people just use the MACD as like a third confirmation. They don't. Some people don't use it at all. So it just depends on like what you find comfortable for yourself. Um, and then the same thing with the stochastic RSI. Same
Can you
principle.
go over the two lines in the MACD?
Okay, this one.
Yeah, like what are those? And
So it's like your fast your signal line. So it's kind of the same principle for the stochastic. It just basically means that we're trending. Sorry, we're trending. A trend is about to be confirmed. So, for instance, when the blue is over the yellow, so like as we see here, price was dropping and then price started rallying. So what this means is that when the orange crosses, we can expect price to sell. When price crosses over, the signal crosses again. When the blue is in front, then we could expect price to start rallying. And that's just it's simple way of just saying like, okay, this is a confirmation to sell. Now this is a confirmation to buy. Of
what
course,
are
it's
the names?
this the lines themselves.
Yes.
I don't even. I think it's like one. I just know them as like one is the signal line and one is the faster line.
One's the signal line and what?
No, the other one is the fast line. So basically, is when the signal line crosses the fast line, is typically that's your indicator for either to sell or buy.
How do we put that on? Because that's the only one I don't know how to put that on.
It automatically comes up when you use the MACD.
Oh, mine don't have that.
Oh, it just has the volume bars.
Yeah.
Okay, yeah, that's okay. So you got a classic MACD. Okay. Um, hmm, what platform are you using?
TOS.
Let me see. I don't know if they have it. This one do that. Let me see. Let me see. So it looks like you have, which one you might be using a different MACD then, because this is it right here.
Because mine just says MACD histogram.
Okay, so yeah, you just got, so you want to get the MACD with prices. So you'll go
Okay,
to
price.
oh, are you there?
Yeah, I'm still listening.
Oh, okay. I thought you was getting ready to do this. So
No.
you just need to go to momentum studies, then go to, so you got, okay, I see what you did. So you went to momentum studies, but you went to the MACD histogram. Actually, this one might even, yeah. You just need to pick MACD.
Okay.
Not just MACD histogram, and then you'll be good to go.
All right, thank you.
Yep. No, that's not gonna do. How do I just remove this one? Okay. Let's go back to, who is going back to? Let me see. Okay. MACD, RSI, stochastic. Is there another indicator that people use often? Can't remember.
Is moving
Bollinger Bands. Oh, sorry.
Bollinger Bands and moving averages? Aren't moving averages considered an indicator?
Yes, it is. Yep.
Okay, yeah, that one I guess I got to kind of understand it. Can you just go over it one more time?
Yep. You can do.
Why do they call it moving? Because is it
I'm sorry. I'm sorry. Maybe.
like,
oh, go ahead. I'm sorry. Go ahead.
I was gonna say, so it's the price, because I know there's something like you take off something or something, right? You take off the last.
It's the average of the prices. That's why.
But then there's something that you take off. You take off one of the prices, but I don't remember if it's like at the beginning or the end or.
So it's the moving average. So however you set it up, if you set it up to be like the 50-day moving average, is going to be the average of the last 50 days. So as you go forward a day, you're going to drop off the last day.
Okay, got it. So it's the average price that it's been for however the time period you're looking at.
Yep. So if you do the 20-day moving average, it'll be the last 20 days. If you do the 14-day moving average, it'll be the last 14 days, etc.
And then when do you drop off the price? What did you say?
So as you move forward in days, you have to drop off a days to keep it at 14 days.
Oh, I see. Okay.
See? Yeah.
Yep, that makes perfect sense. Okay, thank you.
You're welcome.
Okay. Nope, I'm not doing that one.
What platform is this, Tayo?
It's called TradingView.
Okay.
I'm just so used to it. Like, it's a lot of like TOS is not bad at all. If you got TOS, like I really do like TOS. I'm just so used to using TradingView that it's just second nature now.
Yo, did you put the red panda setup on TradingView?
I didn't have a laptop, so I had to. I improvised. Yeah.
You made it work. I'm not bad.
Wait, who in here is in Red Panda?
Nah, Ian had a free futures course, and there was a setup that you were supposed to use with a Ninja Trader, and my guy here used it on TradingView.
How often does he do free ones?
He has another one.
He said yesterday he was going to put another one out in March.
Okay.
He said he was going to open it back up in March.
Okay, thanks.
So Speaking
But
of,
it's not for stocks though, it's for futures, which is different.
yep.
Yeah, I mean,
It's not. Go
I hear.
ahead.
No, I'm in a futures class now. I'm in Jay the Trader's bonds class.
Okay,
For futures.
How's that?
okay,
It's
cool.
actually excellent. The best part is just that, you get to be in the trading room with him.
Every day.
Watching him and all the other traders trade live.
Yeah.
That's the most valuable part.
Are they scalping or do they swing trade?
It's just, well, is day trading is that just automatically scalping or?
So you
They're
have,
more scalping. They close them out, Tyle. They close the trades out. They don't hold them. They basically get their profit out.
Right.
So just to explain that, so you have like a few, so like trading comes in so many different ways. So you have some people that scalp, and scalping just means like you're in a trade for like probably less than an hour. Intraday trading means you're probably
That's how they do it.
Yeah, and intraday traders are usually like holding it for like a little bit more than a few hours, but it can also lead into like the next day. So so if you was to think about day traders as far as people that hold a little longer, these are people that hold for a day up until the next day.
Yeah, no, they're not doing that. They're like we're in the trading room as soon as it opens. So like 8:20 Eastern until like 10:30 Eastern, and they've closed out by the time we.
Got it. Oh, okay, yeah. So yeah, scalping more than likely anything anyway.
Mm-hmm.
That's cool. Like, scalping is actually, I think for a lot of people, just easier for people to do because some people when they first start out, they want to watch the chart because they can't deal with like walking away. So a lot of people when scalping is conducive if it's like fits the kind of person you are because some people they can't walk away from the chart like they're gonna go they can't do it. So if that's the kind of person you are, you have that personality that you want to like do something that like gets you in and out the trade as soon as possible, so you don't have to be stressed about it. And that's
Right.
fine for some people because it works for their personality.
I think the instant money works for my personality.
Yeah,
Look, I'm in that program also. I don't go in the trading room all the time because I be working. But I remember the first day I was in there, and when it was time to close out the trading room, he was like, "Everybody, give me your P&Ls," and they was yelling out the P&Ls. I was like, "Well, that was just now."
Right. Yeah, exactly. Yeah.
It sound like he legit though. That's dope. I like
No. Oh yeah. No.
Wait a minute, that's right now. And they were like, "Yeah, that's just
For
now." I
real.
was like, "Oh shit."
because I like when he be always saying he turned people into ATMs. I was like, damn, that's a really good phrase.
No, that's what I'm saying. It's really
It's not a lie though.
Mm-hmm.
Legit, I don't know why he doesn't charge more for his program.
I think he will. I think he.
How much is it?
It's only he charges. It says $6.99, but I think he always has like a 50% off coupon. But he's an old friend of mine, and like just a few months ago the class was only $99.
What?
Yeah. And
well, girl, whatever is 99, can you send me an alert?
Right. No, it was 99 because he was kind of just starting out, like having a class, and I think once he
I don't think it's gonna be that again.
he realized the value and raised it up. But
I don't think it's gonna be 99 again.
No, it's not. But I think you should get in now because I think now that he's kind of connected to, the Ian Dunlaps of the world or whatever, and he sees Ian's class is $100,000, he's gonna be ready. He probably knows that he's undervaluing himself, especially because the value of his class, like the young lady said, just being able to be in the trading room, watching him trade, he's telling you his exact moves. He's telling you why he's getting in and out of, trades or whatever. Like, this is so valuable. He's going to raise those prices.
Okay.
Yeah, and I've seen him. He's been upgrading like the materials and stuff. Because I've even seen like when I go back into the teachables, it doesn't look the same way it did when I first started it. So like he's definitely putting things in place to make it better. So I
Yeah,
can only imagine he's gonna raise the price, as he should. It's worth it.
it should.
And how long do you have access to the materials for?
For life, really.
Really?
Yeah. And you can
Oh.
always go. You can always go in the trading room. So like a lot of people in the trading room, you know, that have been in this class for forever, but they go in the trading room every morning still.
Yeah, all his courses together are about $100,000. I'm sorry, I'm just like.
I'm sorry, guys. What's his name again?
Jay the Trader. So if you want to look at the class, it's tradelikej.com, I believe, or IamJayTheTrader.com, and just the letter J.
It'd be the ones that'll be courses that be real cheap. That be like they be
The best. Mm-hmm.
They be legit. I knew Jay. I could tell from the way he thought. Like I just knew he was probably like legit at what he was talking about. So
No, he is, and he's just great. He's a great person in general. So it just translates over into.
I always feel like I'm in church with him, though.
Hey,
That's how the trading room is. It'd be a whole sermon in the damn trading room.
I first saw him at the webinar. We're monopolizing the webinar from the other people.
Oh, okay.
I apologize, people, family. I'm sorry. Go ahead, Saya.
All right. So when it comes to the EMAs, you have two kind of moving averages. You actually have a simple moving average, and you actually have an exponential. Exponential just means faster. Like I don't even know how to put it, but this simple just means a simple calculations, and exponential is a little bit more of a different calculations about how they calculate the moving averages. But just know that EMA just means like a faster. So that will be what you'll use if you're trading like on a lower time frame, and you're trying to get in and out your trade. Simple. I always just think about simple moving average. I would use that more for like my day and swing. I mean, not my day, but my swing trade, my long trades. Think of it like that. So in this,
I was just gonna say the EMA is tighter. The way they calculate it, it does the average faster. Like you were saying, like I can't think of the word that they use, but it basically calculates it quicker than it does on the simple moving average. So you'll see that the lines will be tighter to your candles.
mm-hmm.
I think the difference is that the exponential moving average, they weigh the more recent days a lot more than the past days.
There it is. Yeah.
Hey, Tayo, I'm not seeing what you're seeing. I pulled my computer up a little later because I was driving, but I just put something in randomly at TradingView, Apple, clicked on charts. So I only see the one.
You got to set it up like that. So.
Oh, okay.
Okay. Are you able to share your screen? I can show you what to do now if you want. Or can I send mine? I never tried sending this.
Let me see. The lady, how do you share this?
So, right, I'm gonna just show you how, like right now, like you see where it say FX right here on my screen.
Okay.
Hey, where?
Oh, whoa, okay. You gotta do more than just that. You got like that line volume chart. Okay. Let's do this after. I'll help you with this afterwards.
Okay. Okay. Cool.
It's not hard. It's just pretty simple. But I can just show you real quick on here if you could follow. But this is where you change the type of chart. So you look like you got the area one. So you just go here, change it to candles or lines if you like lines. I think some people might find that they actually like lines better because it actually low key gives you what you could call a good support and resistance right there. So it's easier for people to read if you have a hard time reading candles. FYI.
I like to plot mine with the line and then switch it to the candles.
Yep, exactly. Like that's how I always tell people, like you have a hard time figuring out support and resistance first and just switch it to a line, draw your lines and then switch it back to the candles and you're good to go.
Tayo, let me ask you a question. So I've been watching Apple's numbers, And is when you're trying to think about support and resistance, isn't it as easy as, so like maybe last week Apple kept lingering around like 133 a share, and then it had like a little quick little bump up to like, I don't know, went up to like 137 or something, and then now it's kind of, the last few days it's been like lingering at 136. Isn't that just like, can't I just kind of say, okay, 136 is the new support level? Like, do I need to actually look at the chart? Because I'm like, okay, before it was lingering at 133 for several days, then it bumped up a little bit, then it bumped back down, and it's been staying at 136. So the last support level was 133, then the high was like 137. Now for the last few days, it's been 136. It's 136. Or do I actually need to like plot it out on a chart? Or is it that easy to just pay attention to the price that it's been kind of lingering at or consolidating at for days?
So, okay. So first, you don't want to think about it like just because it's here, because yes, it's like you kind of think of this as support for the day, but we don't typically like to think of charting just from that day. Like you want more data to get the bigger picture, because you're looking at it from just only this moment, but price remember where it's been. And so you could focus here, but you will miss out on everything that happened for price. And price remember where it has been before in the past. So when you look at this, but because you're not paying attention to like where has been in like maybe the last 30, 45, and 45 days, which I would say is a good time reference to like chart from. So you'll want to like possibly look at the last 45 or maybe 30 days, depending on how aggressive you want to be. So if that's the case, when price drops, you're going to you're gonna like, what's the word I'm trying to, you're only getting a very narrow picture, and you want to look at the bigger picture in this sense. And
Okay.
yeah, price can be at 136 today, but price can also drop back down to where support in our, when we're using support, we tend to find where price has a hard time escaping from in the instance of the floor. Now, yes, this does have like a sort of a support level too, but it's still too high. It's still too close to the all-time highs. So
Okay.
in general, you wouldn't want to really chart something from here. Now, if you're really aggressive and you want to get in, then of course you will want to like probably get in from here. If you're very aggressive, like if you're like you just don't think price is gonna ever come back down, but if you want to be more patient and just calm, cool, and just wait. And I mean, sometimes the price doesn't come back to you. Sometimes it might not come back down here, but that's why I kind of use like what's called market structure to kind of like give me an indicator, like okay, I think price has a reason to come back down, because price does move in a way. Price action does move in a way, and it make these structures right, and you could see them all throughout a stock's high price history. You could catch it all the time. I mean, so for us, me and Nez, we learned this technique called Wyckoff, and to us, this says distribution, which is where you get like kind of like a hit to the resistance, and then price goes on the markdown because it's distributed. So it's a lot of supply coming in. So it causes the stock price to decrease. On the flip side, you also have accumulation, where price is coming down and then it's accumulating orders, the buy orders, to start going on a rally.
Or
It's like,
what's happening right there where you just marked that black?
so price does, let me try to, I put up my call for it. So you have these different phases where price right here. Can everybody see this? Is this good? Let me make this bigger. Oops, oh, that's a.
Yeah, we can see it.
Yeah, I just want. Okay, so I'm gonna just try to do it from here. So there's these phases of what's called accumulation, and accumulation is just basically where price kind of like moves sideways before it gets ready to go on a bull run. Um, and then distribution is kind of the reverse, where price is now moving in a certain way, where price is getting ready to distribution. We just gonna get ready to go on a bear run to the downside. So it's gonna start downtrending. So for accumulation, in a sense, is when you have price starts marking downs, which is basically it's dropping down, and eventually price is going to fall to an area where it just can't fall no more, right? Because there's a lot of buyers that now enter into the market and are thinking, hey, this is a good price. I'm fine getting it at this price. And the more buyers that start to get in there, it's accumulating these orders, and there's more buying orders start to accumulate as the way as the definition goes. Of course, I mean the word goes, it's accumulation. So it's accumulating all these buying orders, and then it's getting ready to go on a bull run. And so Wyckoff accumulation schematic is basically puts price into these five different phases, where once it's starting to mark down, it finds a preliminary support. So that's what's known as PS, a preliminary support. That's where you start seeing price starts to drop. So like if we was to go here, go in here, this would be kind of like your preliminary support, because this is where it starts to slow down and it starts to like break. So think about it like this: if price has been going, actually, let me get rid of this too. So price, think about it like when price breaks the structure, it's now on a downtrend. So it broke the support and started being a downtrend. But eventually, price is going to stop and find somewhere to find support. So in this area, price was coming, then it stopped here. So that'll be like your preliminary support area. And what you want to look for is that it starts retracing back much further back, because that means there's buyers pushing the price up. And that's kind of, it's not here, but it's called a change of character. Just basically means changing the character of price. So like think of it, if price is going down and now it's starting to pop back up, that's a change of character, meaning that price is starting to find some level of support, meaning price is starting to reverse. Vice versa, the same way too. If price is buying a lot, you'll start seeing where price starts to start selling off, which means sellers are coming in and starting to sell off. So a lot of sellers are starting to take profit, get rid of their orders, get rid of their positions to make profit. That's what's starting to happen. So when you start seeing price start just dropping, but then it starts slowing down, that's your change of character. That's your indicator that you're going to now be in a new trading range. Does that make sense to everybody?
Yes.
Okay. Because I will keep going, and I don't want to look
No,
like.
I think so.
Okay. Yeah, and but if it doesn't make clear, like this, I'll try to figure out a better way of trying to say it. I'm trying to get better at that, like trying
What's
to.
the difference between accumulation and consolidation?
Oh, so if I was to put it, consolidation would just be, because you can have consolidation within accumulation, schematic, and distribution. Consolidation just is more, you can have a schematic be accumulation and that's actually consolidating too. It's the same, it's kind of like almost the same principle. I would just think of it like consolidation is more like the umbrella term for like when price moves sideways. And this is a way of analyzing when price starts moving sideways. So when price starts moving just in the middle of sideways, as we see the sideways action, it's not doing no big moves. That's when we're trying to see, okay, is this accumulation or is this distribution? Make sense?
Mm-hmm. And this accumulation is when it's after it's done accumulate, with the accumulation, it's gonna go into a bull run. If it's in distribution, it's gonna go into a bear run.
Correct.
Okay.
Yep. And then so as we get here, we start seeing it's starting to define the trading range. This one's a pretty short area actually, but that's okay. So the support line is like around here. So this will be like your sell climax. And this would be like your automatic rally. So like I'm sorry, oops, not support, sell climax, also known as support. And then this will just be a top rally. So automatic rally would be like consider your resistance. And it just basically is saying that this is now defining your trading range. This wasn't really in long though, really got out of here quick. So this very short phase, probably because of earnings. Yeah, that's probably what it was too. But just to kind of like go over your phases is a little longer, but like that's your phase A that we just discussed. So it goes up, tested. This will be like this secondary test of the support line. It kind of broke through, which will be kind of considered like a shakeout too in the different schematic. And you'll hear me say like when I always talk about shakeouts, it's just basically mean it's trying to get rid of like loose buyers that with them little trigger hands. Like they start seeing price drop, they get rid of it. They don't want to hold it for too long. It's hot potato to them. So that's what when the price starts dropping, that's what they be trying to do. They're just trying to get people out the position because somebody else wants to take all them positions now. And so all y'all doing is selling it. So when people get rid of them, they're selling it to somebody else for a better. They're getting at a better deal. You're selling at a loss, but they're buying at a gain. And so you get the phase C. So phase C is when you start seeing price starting to like rally. You start seeing indicators of life. So that's when you start seeing the breakup to the upside, and you start seeing price starting to make a little bit like a new higher high. And as we start seeing price bring in, I mean, not higher high, but a higher low, kind of indicates that price is starting to get ready to go on a run. So, and that's what happened. But also earnings happened too. So they had a good earnings and then price just went on a bull run, as you see here. And
how can this show us what Apple was trading at before the split? Like, does this go back?
No, I think they automatically adjust them.
Oh.
You need to use specific charts to show you those, I think.
In this program, are you able to trade like do on demand like Thinkorswim can? Like where you can go back and trade in real time, like but trade
I believe there's some brokerages they do let you trade off of on here, but I don't use them for that. I mainly use it to just chart and to set my alerts. I always still do everything through the actual brokerage app. But you can do it. I do know you can set up you can set it up with
in Thinkorswim, like if you're just looking at the charts and you click on demand, you can like go back to let's say last week and then like trade the market in real time just so you could see what
no, they don't have that.
Oh, okay.
No, I think because I think Thinkorswim was like the first time I've heard of doing. What I can do is oh wait, I wanted to say that I can do like bar replay where I could like play a day over.
Yeah, that because I think that would be helpful to play a day over and say,
Oh yeah, that's what
to be able to practice and say, okay, this looks like a good entry point. What would happen if we got in here and then here's a good exit point, what would have, you know, so to help us
Oh, so yeah.
identify, us identifying good entry and exit points,
You
but
could do
being able
that.
to see like what would have really happened if, you know, if those would have actually been good entry and exit points.
You could do that. I just can't remember if you could do it on this version though. I don't know if you need the. Hey Nez, do you need the version that you pay for to be able to do it, or can anybody use it? The bar replay feature. You there? I guess you're not. Let me see. Well, so you could do the bar, but that's a really good one. That's actually how I got good at reading charts. I literally like one December. I literally
Give me a really quick second. Give me a second. Give me a second, and let's see. Hold on.
Okay. So like this one time, I literally was just I would spend hours just replaying charts and just making charting up and being like, okay, I would get in here and seeing how it will work as price keeps moving, and then find another area to get in and say, okay, I'm getting here. It's gonna start selling and see if I was correct, and then I'll get in here and be like, okay, I'm just thinking to start buying, and I'll also just be like, okay, this is when I'll do a put. Like I just did that, and then reading charts just became so much easier after doing that to the point I honestly just look at charts and I just know where I want to get in. I don't even like, I really don't mark up like that. I mark up to show people what event, like I just look at, like charts mean less to me now than before, which is sucks because I'm now trying to do futures. I need to be back into like looking at charts like the way I used to before. But for stock options, you don't have to do it the same way, so it doesn't matter as much.
Well, then in here, can you go back and maybe we can all, or like we could just say, okay,
replaying charts.
without replaying, I'm saying we could go in your chart here and say, okay, this is a good entry point, this is a good exit point, because that's really what I kind of want to get.
Okay.
Yeah, this it's like, how do you know when to get in, when to get out, when to get in, when to get out?
Yeah.
It's like, I don't understand it.
Kind of
Mastering that is the key.
Kyle. Nicole, you always come with the fire questions. This is Arnetta, by the way. I was thinking the same thing, Tayo. Like, although you may spend a lot of time like that, the time frame in which you gave us, that you'll just kind of play with the charts. How do you validate that you're correct in what you're seeing, if that makes any sense? Like, I get that you're able to see certain things, but how were you able to validate that you were correct?
Very good question.
Time. You don't know until what happens afterwards, right? It's only until you get into the position that you look into what happens after you get into it. With days passing, are you able to tell if you got in at a good spot or not?
Okay.
Like that's honestly the only really way. So like, if you're nervous about certain things, maybe sometimes you could just say, hey, let me just get in on the demo trade and see how it looks like in a few days. Mind you, you're never gonna get it exactly right. All you want to do is just make sure there's a few things you just want to make sure you don't buy at the high, you're not buying within the high area, and you are just buying at a for options this is different. You can just look at the option chart and just make sure that you're never buying at the high of the option chart, actually directly off the option chart, and just wait till they get to like maybe say the average zone and wait to get below that and then buy from there. Or maybe you get really lucky and you might buy it even below the average to the very low to almost the very bottom of where price has only ever existed at. So like, because some of them open up at like $5, some of them open up even more. Sometimes you might get it to where it's less than that. So it's only until you start doing it do you start realizing, okay, maybe if I would have waited a little longer and I'm noticing this certain pattern that I'll get in price here when it's like like a simple rule. Some people have a rule is like you could buy a good point to buy is a good time to buy is typically a few days after earnings if price drops. Because typically that price level is like usually a support line. Another way you could think about it is, let me see. And this comes from like when you're just looking at where price has been. So if you're like, we could just go back a few. Okay, so right here, price, this is an all-time high, so I'm not buying there. It gapped up here. I honestly would probably wait for it to kind of come closer to the gap area because this is a gap I expected to kind of get filled. So I'm gonna wait till it get at least around below 100 or something.
You know what? What are gaps and what do they mean?
Right there in the middle is a gap. You see where he's sliding?
So this area is a gap. Um,
Yeah, I see that. What is
so basically it means when price is there's no price action. So meaning that nothing happened, like it skipped a lot of orders to get here. And that's not how price is supposed to move. Price is supposed to move like this, you know. Oops, wrong one. Price is supposed to move like this, right? But when sometimes there are times where price does and then gaps, but there's orders that were here, so that's a problem because it has to fill those orders. You can't just skip over.
but so then why is the gap there though?
Oh, because sometimes that's when the algorithm tradings pop in and they just like manipulate price to as well. Maybe the order is just so large it just bypasses a lot of different orders, and because of that, it skips all these other orders and just to fulfill the orders of the whatever person was placing the order. So because of that, sometimes price will fill in the gap. Sometimes it doesn't, but in most cases, there are times where it fills up the gap. So this now tells me it's not going to probably fill up the gap, but that's cool because actually, yeah, because it's usually gaps get filled within the first 30 days. So if it doesn't get filled in the 30 days, then you know it's not going to get filled. So from this point, looking at it from here, this is from August 20. Oh, this is the split. This is not a good example to use. But this right here, so if I know it here, then this would have been an area where I would have got in at because came out down low here. It didn't come fill this gap in. It's already been like over 30 days. So anything around this area would be where I would want to get in at. And to be aggressive, it would just be like anything around here. So if I came down here, this would be an area where I would want to get in at. But that's
Tayo, Vanessa actually put in the chat, but I thought about it a couple of months ago. I think I sent it to Zay. I can't remember. But anyway, maybe one of our sessions could be like back testing.
okay.
I've always had questions on back testing. And Vanessa just put in the chat as she was leaving. And I think that's a good idea too, because it'll help us to understand and validate some of that information. I mean, if and whenever you have time, I would appreciate it.
No, that's cool. We can do that. So, okay, so looking at this, what I've seen here is this was a resistance line, support. Let me make this green. So And then there's another level like here. All right.
How do you know what a resistance line is? Sorry.
So resistance line is technically when you start seeing, how can I put it? A level like where price starts to get it, has a hard time trying to like get past. So price went up here and made a resistance. Technically, I guess really would be like 137, right? But I like to put it in front of the candle for um to give me like a more of like a level, a zone area. So, but when it dropped here, it kind of made a different, it kind of made a lower resistance because as we see here, it doesn't really pass this area. So this becomes another resistance level too. Um, and a good way of knowing if it's a resistance too is like typically like right here, when it gapped up, this became like a resistance. And that's because you can tell because typically resistance becomes supports. So as we get here, dropped here, this was once a resistance, now this became a support. Um, let's see. Other ones too was like when like so if you was looking at it from here, this this technically would be your resistance level here. God bless you. And then let me just go. All right, so let's say you're here looking here, right? So you can make this either the next point for you to want to get in, or you could say you want to be extra patient and possible. Then you might make so you'll probably either pick this point here, like this in this area here, or you could probably pick like this area here and see if it comes in the area. So if you would have wanted here, then you could have got in here, and then you would have been in the trade. Okay, so now that we got in here, you see what happened? So in this point, this was a resistance level here, this was a support area here. Once we broke this area here, we now made a new trading range.
That makes sense.
So now this would be where I start looking at what's going to be the new support level. So this my first indicator would be this level, of course. Okay, prices going to rampage now. Oh, did I just go to the present? Oh, damn. I didn't mean to do that. Oh, I guess that was all it. Okay, no, yeah. So this would have been your last area of support, and then it's just started rallying. So now this would be the next area that I would personally want to get in is around here.
What price is that?
Sorry, I balled it all up. So this is around 128. If not, then maybe if I was a little bit, then probably like around 132.
So the resistance areas are areas where you would go in to make your options, buy your options, play your contract.
You want to make your support areas technically where you want to buy your option contract. So resistance. So if you was like in a sense day trading, or actually even if you was in a year and a half, you sort of wanted to roll, where you will want to get out of your trade is the resistance level, because that's where people are going to start buying. So like in this area, this was like a resistance level. So as you see here, when price came back up here, what happened? It dropped back down. So that's why you would want to make this your resistance, your resistance area where you want to sell at. Your support is where you want to buy, because as we see in here, it gapped up. When price came all the way back down here, though, another good opportunity to buy. So if you would have bought here, your price could have been like $15 for your option contract, right? But when it get here, it's probably gonna be like 7, 8, 9, maybe. Around here, maybe about 13, 11. Get back here, back to around 7, 6, 8.
Tayo, do you day trade at all or swing?
Who you been talking to?
Oh my God, do you do?
I swing trade and I day trade puts. I don't really day trade though.
I'm so scared of puts. I can't even go there. This is too much.
Yeah, you gotta have a little bit more confluences for puts. Like if I'm doing a put, I'm not looking. First of all, I'm looking at the weekly. Now this is where I do use indicators. I actually do use indicators here because I actually want to make sure that. Oh shit. Wait, do I gotta add? I want a few things to match up, like when I'm using so for here, for like so this would have been a look like an area for me to get in for a buy. Yep, I like this. Okay, so for example, here, one, I still need everything on. I need the higher time frame to tell me that it's getting ready to do a put. Because if the higher time frames isn't telling me, I don't want to get in because puts are like dangerous. You don't. If I don't see a reason that it's gonna start selling, and it might have well can sell on the daily, but it could be very short lived, and then I don't want to feel like I have to get like have to watch it. I don't like to watch my trades. So I like to just set my trades in and just leave away, and I either win it or I don't. And I don't like to lose, so I need to win. So for me to win, I need to pick more conviction, pick setups that give me a higher conviction. So those trades are typically like in this case. So this is an indicator like this is your historical volatility percentile. So technically, when the darker it is, that means it's very volatile. When it's lighter, that means it's volatility is very low. So this on the weekly, I need this line up. I need the RSI to tell me it's in the over bought area. I need this line. I need the dark green lines here. I need this gap to be here between these lines because that tells me that there's a trend in this very high trend. So that means eventually it's going to start wanting to close. So, and I need it to be also out on the Bollinger Band. And I need this is my other indicator I like too, but so all this has to tell me that it's getting ready to be, that it's overbought or it's just been on a high run. And the gap here is like my really bread and butter because like the bigger the gap is, that means eventually it has to close that gap. So if I start seeing that it's about to close, then I'm like, oh, okay, that's a good time for me to enter so I could get in on the daily and look at this. This is a week. So this is a week. If you was to get in here or even here, you had 2 weeks of you could have held a put.
Yeah, but Tayo, when you're showing what we're looking at the past, right? So if you're looking at it and you're saying this is a good time for me to get in, you would actually be looking at what, an hourly chart or a daily chart or a 2-day chart? Because looking back at it, we can see that. But if you were right there at the point where that first downward bar is happening in that week chart, you
Yeah, but
there is no trend, right?
No. So this would look like this though. So if we was to look at it from here, this will already be kind of telling me that this is a good time to look for puts. So if time was to keep going past, it will look like that.
So which chart is this? This is still a weekly chart.
Yeah.
So you would have.
So if like, let's say Friday,
So it was going up, right? Like last week, basically, that green candle right before the red one was basically last week. So Monday, so that red bar right there is actually last week, and the green one is the week before last, because it's a whole week that the candle is showing, correct?
right, correct.
Okay.
So
So on Monday, you would have been looking at this chart, and you would have seen that basically last week closed with that red candle.
right. So
Okay.
things probably would have looked like that Friday night. So Friday night, I would have probably looked at it, or Saturday, Sunday, whatever like that, or even maybe Monday quickly or something, because I probably would have got an alert that it's out the Bollinger Band. So once I got that alert that it's out the Bollinger Band, I would have looked and saw all of this. And then this would have told me that this is a good time to get in, because this is also weekly. So this RSI being in a very over bought area, and it's like, this is like the support line, the resistance line for the RSI, then I could have broke it down to start going look on the daily. And then this is where I would have tried to find like the real entry point for me to get in at.
Okay.
And then you just keep, then you play it.
And this is if you're buying a put, basically. You're looking to sell, or you have an obligation to sell the contract.
Wait, say that again?
When you have I thought the puts are obligations to sell, whereas calls are option to buy.
Yep. So in a sense, what that means is that when you have a put, you want a price to be cheaper.
You're shorting it.
Yep, in a sense.
Yeah.
So in this sense, if you're doing that, then it's like just reverse it, right? So if you're buying at the high, then you want to sell at the low.
Right.
So at this point, what this means for me is that I want to sell my put when it gets to the new support line, because that's what I'm expecting, is that if I bought it here, the nearest support is here, like in this zone area. So once I start seeing price get around here, I'm gonna sell. So technically, I probably would have like a stop loss like around this area and just see what happens, and I'll just let it. Now I'll probably like sell once it gets close to this area.
But you manually drew those lines on there, right?
Yeah.
Okay.
Yep. But remember, so like if you're charting stuff up, that's like, you don't just stays there. It doesn't go away when you chart, for the most part. Well, I'll do this afterwards, but still, I would have this would have been support regardless. So I would just know that I'm selling when I get to around this area.
Well, wait, hold on a minute. That green line where you saying that it's support, two of the candlesticks go through it in the future based on where we are, because I thought we were back with the that first red candlestick. That's what's that, a hammer or something? I don't know. The one it's heavy on the bottom. Is that where we were?
No, we was here. So we would have got in like, no, actually I think we would have got in like around, I think it was here.
It was starting to show a trend of downward, because of course you were doing a put. But my question is, when you look at your green support line, you wouldn't have drawn it there at that point, because the other points for it to go through didn't exist, because they come after your drops. So that support line wouldn't have been there.
No. I'm considering the support because there's a gap here.
Oh, okay. So you drew that line because of the gap, not because of the bars.
Well, I mean, to be honest, I wouldn't have drawn a line in general. I just would have known I could sell around here.
Oh, okay. So for the newbie like me,
so yeah,
I should put if I see a gap, put a line.
So when you're looking at a gap, just think of a gap as like a long candle. So if you see a gap here, then this is a long candle up in a sense. And then if you see a gap down, it's about to be.
Okay, so wherever there are gaps, is automatically either support or resistance, depending upon the direction it's going in.
Yes, you could think of it like that, but don't make that a hardcore rule. Just know that like that, you can kind of think of it like that. But regardless, though, this would have been the last area of point of interest, even if you didn't have a gap here. Like this is just a candle. this still would have been a area of point of interest because this would have been what I consider like a support area before from like here to here. Because I will be looking at this when I'm in this position for a put, right? I won't see none of this. I will only be seeing.
Right.
So I can either think about them selling. Well, I wouldn't think price would come this low. It would be nice if it did, but I will be nervous about waiting for this long. So if I'm getting into the position here, I'm gonna be looking to sell it like around here regardless.
Okay. So do you do hedges like that? Where you buy a call and a put? Do go in both directions?
No, I just buy puts because I just expect price to drop. I don't have to be in a position for a call to do a put. I'll do puts on a company. I actually do puts on like companies I think is not gonna do good too. So it doesn't necessarily like Zoom was one. Like I knew earnings was gonna be horrible, so I did a put.
No, I'm just asking because I know it's a strategy where you buy it in both directions so that regardless of what happens, you make the money in the middle.
Oh yeah, no, I know.
That's not what you're doing.
Yeah,
You're saying basically. Okay.
No,
You know what? That's a good point. Can you? I keep hearing people talking about doing that, buying in both directions, and I don't understand what that is and why. And like,
so okay, one, I hope they're not buying at the same time unless they're setting out the calendar. But so basically what it means is that if you expect your position to go long, right? So because think about it, when we buy our position, we're buying them, we want to buy them when it's low and we want to buy like when prices, we want to be early to the price. So we expect prices to start now jumping up, right? So let's say you're buying it, you now in negative or you're only like 2% profit, right? Eventually you start rallying and then eventually you're now at like you've been running hot and hot and hot. Eventually that's gonna stop. Eventually that price is gonna slow down and it's gonna need to take a breather. It's gonna have to like relax.
Pullback, right?
Yeah, it's gonna have to pull back. It can't just keep running hot forever. Like that's not gonna be good. So um what eventually what that so then eventually when you start realizing that price been running too hot, then you'll set up a put, which would be I think Mark says he does this for 3 months. You can do it for however long you want to get in position for, but or you however long you think it's gonna take for it to play out. But you can set the put, and then you can just pick your support line, the strike price as your pick what you think is gonna be support as your strike price, and then however time you feel like you're gonna need for it to get there. Um, the main point, it might not get to that support line again, but you just want it to get dropped really, really you want it to start dropping towards your price. And you don't want to make sure you bought two in the middle. That's why I look at the higher time frame to find when I want to get in because you could see an opportunity for a put on a daily, but not on a weekly. So your selling might not last that long. So that's why I look at the weekly because I want to make sure I buy at a very high price. Because if I'm buying like let's say if I bought here, it went up on 2 days and then it finally dropped. That's great because eventually then once it gets to like around here, I'm in the money. I'm starting to seeing my contract be green. So I was in drawdown for 2 days, but now I'm starting to be in green. The problem is though, like if you get into it early when you buy your put, you could buy like here just because you see like sometimes some people just look at the Bollinger Band and cool, you out the Bollinger Band, but it started moving sideways. So price still went up. So if you got in the put here, you need to wait for price to always come back, all the way come back down here for you to start seeing the profit. That's why I like to look at the higher time frame because that gives me a more confidence in my trade that I'm buying at the absolute high. You just want to buy in a high area. And if you buy in the early high area, you might be okay, but sometimes it might not even come back this far down. So you might not even ever get to even close your trade in profit, which sucks.
now let me ask you.
Teo, how long did it take you to like master this? Like how long did it take for it to stop looking foreign and sounding foreign to you?
If you're talking about charts, it's not gonna take that long. It's like charts, you just need to stick with looking at charts and just keep staying at it. And I swear, like maybe like 6 months is not gonna feel foreign to you. 3 to 6 months, I mean. And that just really depends on like how much time you put in. Like I I don't have a good personality for stuff like this. Well, I guess I do have a good. I'm abnormal when it comes to stuff like this because I have tunnel vision. It's really bad. Like I don't see nothing else in the world. Like really really bad. So if I want to learn something and I don't know it and it pisses me off, I dive into it like 24/7. Like this is all I focus on. So um, for me, it just was quicker because I was like eat breathe charts 24/7. But even outside of that, it's gonna come from just being consistent and just looking at charts and just playing around with it, like actually trying to chart up your own, like get on the chart and say, okay, I think this is gonna be support, and I think this is gonna be resistance. And if you're not sure, you could go to like bar chart and see and go to bar chart. Look at the stock on the bar chart. Let's see. And you can use their trader cheat sheet. And this tells you what their support, what's their support and what's their resistance. And then that can be how you can determine if you're getting close to the money in your charting skills. Like draw it up and then see how you compare with what bar chart says, and then see what maybe you did wrong, and then okay, maybe it'll start clicking to you more like, oh, okay, I see why they picked that now. I see why they did this now. So just do it that way, and then that eventually is just gonna come to you. You start realizing what to look for.
I just put
Thanks
in the
for
chat.
that.
I just put in the chat the candlestick trading Bible.
Oh, okay. Oh, yeah, that's a good book. That's about the candlestick.
Yeah.
From the
Yeah, it's a really great resource to learn how to read candles. I just put it in the chat so you can download it.
Thank you.
But real quick, Tayo, so when you do this, like kind of when you buy a put to try to offset or whatever, you don't do anything to your original call option, right? It's just that sits there.
yeah.
And then you're just, so basically you're only buying a put on it because you know that your call has rallied and you know it's eventually going to come down. So you're just like, okay, let me just buy one because I know what's about to happen.
Right. And think about it, like think about how we just had this massive run a few weeks ago and then it just started dropping. So like if you would have had a put, that would have been like now you made money both ways.
Okay, got it. Okay.
So like everything that you was losing for them days would have been actually money you would have made from the put side, and now you can put that back into the trade.
Got it.
Always keep some cash on the hand sometimes, because when you know it's a put and you're like, dang, I can't buy a contract, you get pissed. But like now you could have turned a simple contract into like enough money to buy a whole new contract.
Right. Okay. I guess, but then my thing is, how do you, with puts, they seem so scary in terms of how do you know how far? Oh, so is when you're buying a put, you still use the same resistance and support levels, right? So you'll know that a bearish time is only going to go but as low as the last support level. Is that what it is? Is that how you pick your put price?
Sometimes it's going to be kind of hard to find out exactly how low it's going to go, but you are using, but so that's why you use like from the charts. So sometimes the price can do fake drops, but so that's why puts are kind of like sometimes a little dangerous. But in this sense, this one, Apple is kind of like performing very well. So actually, this is actually a really nice chart. Apple is performing very well. So when I say very well, I mean like it's actually respecting a lot of like its structure, like it's coming back to complete structure. So it's like it's not doing no funny moves where like Tesla will do something like and then act like it's gonna come back and just go crazy. But like Apple is doing something like this. It's coming back. So it's just a nice chart. That's all I mean by that. And that's what just happens when you start getting more intimate with like certain stocks. So everything starts looking like a little bit more easier to read because you just know how the stock moves. So in this case, like for Apple though, like if you would have got in here at this point, anytime in this area, then you could have probably said, I'm gonna get out here or I'm gonna get out here, depending on how aggressive you want or how aggressive you want to be. So if you're going to be more aggressive, then of course that means you're waiting for it to come here. If you're going to be a little aggressive and you just like you want to play a little safer, I mean, then you're going to probably say, okay, I'm gonna get in, I'm gonna get out at this level. And what was the next? I'm sorry. What was the rest of the question?
I just forgot it.
A simple question? No, go ahead. Hello, did you remember it?
I was just about to. Let me think about it. I forgot.
I have a logistics question. The data that's underneath the price points, underneath on the upper left hand side in Trading View? No, lower. Under EMA. How do you add? Because I removed stuff, but I don't know how to add indicators there. So how do you get like the VPVR number and the go no go?
Oh, so these are different indicators. So what you go here is where it say FX,
Mm-hmm.
and you will type in the indicator that you're looking for, and then you just favorite it, and then you just click on it, and then it'll come up.
It doesn't come up over there for me. It shows the lines on the chart, but it doesn't put the text up there.
Oh, you probably gotta hide it. You probably gotta click this.
No, I don't.
Well, if you don't have that, then maybe you might have to do right click settings, I think. But actually, I don't know if that. Okay, maybe go indicator titles. Indicator, maybe it might be there.
Okay, thank you.
Yep. But we gotta go, y'all. The come up about to start. So